Turbo Trading with head trader Robert Knight, MBA.
This video will explain how to trade our Turbo Trading range trade alerts. Every morning we post in the trade alerts room a list of stocks to range trade, mostly the big names, the mega caps, the SPY, Apple, British Airways, Netflix, Nvidia, AMD, Roku, Tesla, Amazon, Microsoft, Meta Platforms, and Alphabet. And Tyler gives us the range that we should trade those in. So I'm going to have a look at those on how we trade those the best way. Now you can either trade using options or trading the equity itself. So Apple, nice strong rising channel that this stock had been in, but this morning it was trading sideways and then popped and had a bit of a traded up to 174.30. So Tyler said on this, the range between 171 and 172 is the neutral range. So here we are, 171 and 172. There's the neutral range. If it's in that range, then we don't trade it. But then he says over 172, which was this area here, trade to 172.50 to 174.50. So 172.50 isn't about this range here. To 174.50. That's up here. There's your range. A little higher actually up here. And then he had some other guidance in there. 173.50. So it's in about this range here. So if the stock is trading in this neutral range, then we don't take the trade on. But this morning it spiked very quickly. And so as soon as it goes over 172, you take the position, you trade it. And so then it got up to the first target level here at 172.75 here, where you would sell a little piece of it. And then again here it tags the 173.50, that's our next level. And you can see where these levels are, how there's support resistance levels. So this was resistance to start with, but became support. And then here at the 173.50 level, that's a resistance level. Did pop up through it, pulled back, held the support, and then it traded up to the top of the range there at 174.50. The next one that he talked about was BA. Now the BA, the range was between 190.70 and 191.70. So there's your neutral range in there. Now it did pop a little bit above it. And so you may have been faked out at a 190.70. You traded to 192.5, which wasn't in our range. Our first range was up here at 193. So if you had taken that trade at the 190.70, but you can see it double topped in there, then you want to get out of that trade, at least pull back to the support and it hits into the neutral range. Then you would exit the trade because it's back at the neutral range. But then it drops below, comes back up to the neutral range, and then sells off again. So you had a couple opportunities to trade this BA. He said under 190.70, which is this level here. And to trade it down to 190 and 189. So 190 in here and 189. And then below 189, trade it down to 187.50. But it only got down to 188, so it didn't tag that target. But you can see as it drops down through it, you short it or buy puts. It did trade down to the double bottom there at 189.50. So, you know, that'd be an opportunity to cover it when you see a change. But then when it got back up to the resistance there at 190.70, you could watch it closely for sure. But then when it dropped back through it, again, short it again, or, you know, buy the puts, and look at how it sold off. This 189, you can see how it traded down through it and then popped back up, and that now became resistance at 189 and now backed off some more. So there was a very good trade there on the British Airways this morning from the alerts. Now Netflix, our range on Netflix was 374 to 378.50. Let's see, we're 374. So it didn't really, the neutral range was here, 374, to 378.50. So there's your range there. Now it didn't trade to the bottom of it, but it did start out this morning at around 376. So it was in the neutral range, but then it broke out. You can see this is the resistance area at 378.50. It did take a nice pop, pulled back, held the support, gave you another opportunity. So you could have traded this twice. Buy it here, sell it at the targets. Now our targets on Netflix were 382 here, and 385 and 386. So I never got to the 386, but it did trade to the 385 target. So on this trade like this, when it pops up through out of the neutral range, you take buy a call or buy the equity, trade it up, and then it double at our first target. So you'd sell a piece of your position at our first target. Double top there, pulled back. Now you had an opportunity to re-enter this trade. Got back up to the target. You could have sold it there. You can see it double topped again. Now it didn't pull back as much. So you just sell out, you know, a quarter or half your position at these levels. Then it went through and it traded up right up to close to 385, I think within pennies probably, 384.80. So and then you have that big long spike up with the next candle red, you need to get out of that trade. So there was opportunities there to trade this. I mean, you don't have to. It's not an exact science. You don't need to be right on the 385. But when you get that long wick up and the next candle's red, then you want to get out of that trade and sell it off. And sure enough, it came back and right down to the support level. NVIDIA, the neutral range on NVIDIA this morning was 436 to 440. So here's your neutral range. We can see that this morning it popped a little bit, pulled back, and then broke out through it. So there was your opportunity to take the trade at around 440 there, 440.35. And it traded through our ranges. NVIDIA traded, we had 42.50. Ran through that pretty quickly, the 42.50. Came back, held the support there on the 42.50. 45 and 48. There's your 45 level. You can see how these all line up to be areas of support and resistance, and then 448. You can see here the resistance. So a good opportunity. Then it actually traded up to 451, almost 452. So very nice trade. A $12 move if you're taking the equity or the call. So it pops up, pulls back. I mean, you could sell a quarter position in here. trades to the new level. You don't have to sell it all, but you popped through it and then came back, held the support, gives you another opportunity. You could actually re-enter it and then ride it back up to the 452 level. Lots of great opportunities to trade NVIDIA today with those alerts. AMD. Now this was a choppy trade. This is a good example of a trade you probably wouldn't take. So the range for this was 102.50 to 103.50. So here's your range. It just pretty much stayed in that range. I mean, there was a couple of fake out breakouts there. So, you know, you may have, if you had taken this, if this was the one you were watching, you had taken this trade, you would have had a fake out breakout there, and you may not have, it may not have provided you with much opportunity. I mean, it's not an exact science, but there, you know, this mostly stayed in this neutral range all day long here. So no real trades for us on AMD, or if you did take it, you have to get out of it very quickly. You got a big double top there, fake out, breakout, comes back, you know, you lose a few pennies on it. Same thing when it broke down through the bottom, you could have taken the short position at the 102.50. And it did give you a bit of opportunity, not too much. And then it came back. You'd want to be covering that when it came back up to it. And then it got into the neutral range. There's no further trading on that. So they're not all going to be winners. But what you do is you take the ones that are running and stick with them. The ones that are trading in the neutral range or come back into the neutral range, you leave those alone and just try to trade the ones that are having the great, you know, having the very good moves on the big momentum trades. Roku, we had between 70 and 71. Same thing, not much momentum or not much range in this one. Mostly in the trading range. It did pop, trade to 72. So if you had taken it, there was a dollar move in there. You could have maybe caught it. Most of it was in the neutral range, though. So not really a trade that we would have been too aggressive on. Tesla, on the other hand, though, had a nice move. It was in the range, was in the 244 to 246 range. And we see this morning, it traded, you know, sort of was quite choppy, so that you could have, you know, you might have been chopped out on these. We spiked down, spiked up. But when it did finally break out through it and got into this nice, strong rising channel, those are the, you know, you may not trade it for the first 10, 15 minutes. And then wait for it to get into a bit, you know, show the direction of the momentum. We had it at over 246 to trade to 248. 250, $2.52 every $2, $2.52, and $2.54. So every time it got up into an area of these resistance levels, you sell a piece of your position. So here you sell a quarter at the $2 move, another at $4, $6, and $8. It's a great trade. A bit choppy to start with, so difficult maybe to stay in. That big long wick up, next candle's red. You need to get out of the trade. Sure enough, it came down, but it held support at the bottom of the neutral range. Gave you another opportunity to enter it here when it broke back out through the neutral range again. Broke out of the neutral range, popped, pulled back, and then, you know, held support on the 50 EMA there, and then got into this nice rising channel. Great trade to stay, you know, easier one to stay in as it gets into a nice rising channel like this. It's our typical channel trade that we trade. And then every $2 you piece it out, whether you were selling depending whether you were buying the call options or trading the equity. Amazon today, the neutral range on Amazon was 126.80 to 127.50. So 127.50 in about like this. There's your neutral range. Traded in it at the opening and then popped out of it. So there was your buy when it popped out of the neutral range. And it traded to 130.5. Or the average, the ranges for those were 128.75, 129.50, and 130.30. Traded to 130.50, it looks like. So, I mean, these, the call is traded to 130.47. So 17 cents over what we thought our top target would be. So you can see that the support resistance areas that Tyler's putting out are very, very accurate. So choppy to start with, in the neutral range, you don't take a trade one way or the other. Pops out, take the trade, let it run, sell out when you get up into the target areas. Microsoft today. This Microsoft was a bit choppy this morning. 315 to 317 was your trading range. The neutral range, like that. Popped out. If you missed it on the way out, you could have bought it on the way back. Held support. Now it was a bit choppy in here, 317. Our target was, on the Microsoft, was 318.50 in here. And 320.50 up here. So you can see on this trade, if you had the nerve to do it, because it was quite choppy, but you buy on the break, sell it, sell a piece at the first target, but it pulled back, held support. You could reposition yourself, got up to resistance. You did that 4 or 5 times. There was 4 or 5 trades in there. You could have scalped it. And then boom, on the one time, it continued to go and it did trade our upper targets. So again, nice trade. So there was opportunities to trade this, scalp it first thing this morning in those trades. And then when it really went off, because of course you don't sell your whole position at the first target, you only sell pieces of it. Sell a piece, buy it back, sell a piece, buy it back, sell a piece, buy it back. Do that 4 or 5 times. You've got a nice day just trading, just scalping it like that. But then when you sold a piece here and it kept going, you stay in that trade. And when it got up to the top of the market, their markets are level of 32.50, sell some more and then try to get some more off as it continues to go. But when it failed to hold that support there at 32.50, 320.50, you get out of the trade. Lots of opportunities to trade Microsoft there this morning. Meta, kind of a choppy trade on the Meta today. Between 300 and 302 was the range here. So it did pop out. You had to be pretty quick to catch it. And then, choppy at the top here. But those were our targets. The target from a 302 entry was 303.35, 304.50, in this area here. 305, 307, traded up to 307 and change. So if you were able to quick enough to catch the pop out, you sell some at the 304.50 area, sell some at 307, comes back, holds support. You could have re-entered the position, sold it again on the double top, got out of the trade, and then, because that's a bearish trade pattern once it makes a double top like that. And now it's come back off. And the last one is Alphabet. Again, 131 to 132 is your neutral range. You had to be quick to catch this. But if you did, traded to our targets, 134.40 was our target. Traded up through that level and higher. So again, you had to be quick to catch it. But if you have your trade station all set up, ready to go with these orders in place, so all you need to do is click the button. You can be fast enough to catch them. And away it goes. That was a nice move. You know, a couple, $2-3 trading Google, whether you had trading the options or trading the equity. Now, if you're trading the options, generally I like to trade at the money nearest term. So the option that's about to expire at the money to trade these by options. So there's a synopsis on how we trade our range trades.
Don't forget to like and subscribe to our channel. Reach new levels of trading proficiency. Become a member at turbotrading.biz.